where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. The stage is set, digging deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Atomcash, and I'm bringing you the firepower that your financial life has been or may be missing. Whether you're new to trading or a trading savant, I aim to turn complexity into clarity with a shot of aggression. Now today we have a thunderous lineup of segments for you all to give you as much information as quickly as possible. We're going to open up the show with some open discussion. We had a lot of data come through overnight, so we'll be talking about that. Obviously the market's down a little bit here in pre-market, so a lot to talk about there. It is May, so it's the end of the month, so we're going to keep an eye on that and look forward into May. On the back of that, I have a segment called Looking Ahead, which is going to start at around 9:45. Today's going to be a little bit shorter show than usual, but we have Looking Ahead at 9:45, where we're going to take a 3-month outlook on the overall market and kind of see where we are. We've had a crazy month. And I think it's good to kind of pull back and look at things from like the daily and the weekly, kind of get a better idea of where we could be going, either which way, depending on how the day turns out today. And then finally, a favorite segment from a lot of you, I've heard a lot of feedback on it, Raccoon Trades. I find some stocks for you guys, I pull them out of the dumpster, they're discounted stocks that have good stories, good financials, whatever it may be. In this case, I mixed in some lower risk stuff. I have 3 names for you that I'll be bringing to you around 10 o'clock, so if you're interested in that, make sure you stick around for that. Now, today is already off to an interesting start in the pre-market right now. A little bit of a sell-off here. We're down about 1.3% on SPY, currently trading 546.55 on the market, and that's mainly due to the GDP Q over Q, or quarter over quarter. Excuse me, as well as some employment information, or some employment numbers coming through, which I warned of yesterday. We had ADP numbers come in, decent miss, and GDP about what it was expected, but still worse than expected. So those two things together definitely give the market a little bit of a spook here in pre-market, and you're seeing that with the market coming down a little bit here in the pre-market. Volatility is up, your UVXY is up, so we're seeing a little bit of a shift here, which no surprise off the back of that news. Now with that being said, we're in a nice little cluster of support here. As I mentioned to you guys all the time with these LOIs I have on my chart, pretty important. We got 549.73 to the upside here, which broke earlier in the morning. You can actually see where we broke down, came back up, retested, and then sold off to this LOI right here at 546.87, which we're kind of hovering around, and that all-important 50% retracement that I've said, I think, on every show this week so far at 546.60. Now, that 50% retracement is a fib retracement from that all-time high to that recent localizer, or the year-to-date low. So this is an interesting area. It's also right around that Liberation Day pricing, something else we talked about on this show. So in a very tumultuous spot on the SPY here, today is going to be a very interesting day as well. We have the end of month print, which we've been talking about, which we want to look at that real quick, and we'll talk about that more later on in the show when we get to the looking ahead portion. Still forming a pretty crazy hammer candle. For those of you who don't know what a hammer candle could be, or could mean, or could look like, very long wick, which you see right here on the chart, and a body closing higher, tiny little wick on the top. That's indicative of price action coming down, so a lot of selling, but buyers bringing the price back up. So that's typically a bullish reversal from a bear trend. On the monthly chart, that's even better. However, anything can happen today. It's not the end of the month yet. This candle is not closed yet. At the end of the day today, that will change. Now, with that in mind, we do have some important earnings coming up. We have Apple and Microsoft reporting. I believe Microsoft reports today after hours, if I'm not mistaken. Let me just double check before I misspeak. Yes, Microsoft reports after hours today, and so does Meta. So very important. Then you got Apple tomorrow. So big names reporting. In terms of news for today, we do have PC at 10 o'clock, so keep an eye on that. That will affect the market. And consumer spending. Two things are very important to the market right now. Very sensitive to this kind of data, so we're going to see how that may impact the market, especially coming off of not great ADP information or data, and GDP that was relatively expected, but any sign of additional weakness, not a great sign. So we'll see how the market reacts at 10 o'clock and get a better idea on what things could look like past 10 o'clock. With that being said, we also have Trump speaking at 11. He's speaking every day. He says something, could affect the market, may not. That doesn't mean I'm bullish or bearish. What that means is I'm risk off in that time, because he could just say some wild, crazy thing that completely is unplannable, irrelevant, and frankly, no one really knows what he's going to say at this point, and the words can affect the market, obviously. So keep an eye on that at 11. Through the end of the day, though, not much. You may see some positioning going into Microsoft and Meta earnings, obviously. You do have Trump speaking again at market close, and then again at 8 o'clock tonight on his first 100 days. So these are things that can impact the market after market closes. Like I said, very, very volatile day today and tomorrow. This whole week is a crazy week. As I alluded to the past, or if you didn't catch the previous two episodes, very heavy, important week with over 30% of the S&P 500 and over 30% of the NASDAQ reporting this week. And it's important to keep that in mind, because that information kind of gives you a real feel of what the market's experiencing. Obviously, we have this data that comes through and gives us an idea, obviously, of the economic impact of things. And the earnings that we're seeing reported for don't necessarily take into account tariffs yet, because we're looking at data from basically end of year 2024. So we're not really... The impact of tariffs aren't felt yet. However, the forward-looking statements from these companies is what I'm most interested in, because that information will heavily impact how the perception of tariffs are going forward. So especially with companies that are a little bit more sensitive to that, to tariffs, importing and exporting goods, obviously, those companies you want to keep an eye on for, especially. With that being said, let's dig a little deeper and look across the board now and see what we got. So like I said, you're going to want to keep an eye on this 50% retracement today, and this 546.87 on SPY. It should act as some level of support. If you do see some bearishness, I wouldn't be too overtly bearish unless we break this 545.37. So decent cluster of support here on the market. Basically, if you break that 545.37, you will more than likely get a pull down to this 541.47 area. Pretty cut and dry today that after that data came through, the market right now is probably looking to sit in this range here, which is about if we open right around here, you're looking at about a 2 to 3 point range on the day, which isn't shocking, but you'd want to look for those range breaks either to the upside or the downside, because that's where the opportunity will be if you are a day trader on the day. Looking at the Qs, obviously we're seeing the most weakness, which is actually kind of alarming if you are a growth trader, considering the fact that Meta, Apple, and Microsoft are all reporting. Apple tomorrow, but those two are reporting later today, which is what you want to keep an eye on. And if we look at our sectors right now, I believe, let me make sure. Ooh, actually, consumer discretionary got nailed to a cross, down 2.5%. Oof. I was going to say technology is the worst, but consumer discretionary really got hammered here in the pre-market. But all sectors except consumer staples are red. Now, what does that mean, right? We talked about this in one of our previous episodes, but when things lean more bearish, you want to see where money may flee to. Consumer staples, your, I guess, energy, kind of depending on how you tilt energy, utilities specifically, not oil, depending on who you are and your thesis. But you want to look at these consumer staples, sometimes materials in this environment, not materials, but utilities specifically. It's what you want to keep an eye on, due to the fact that these are the areas people flee to when there is loss in growth, right? Utilities aren't going anywhere. Your water is going to be supplied every day. Your electricity is coming through every day, but they're not exciting companies, right? So those are the things you want to keep an eye on as you head into this iffy area into the end of the month. Hey Adam, hope you're doing well. Are you formatting for TikTok your videos vertical inside a widescreen aspect ratio? So there should be, if you're watching on YouTube, you should be able to see both a vertical and a horizontal. Is it only one way or the other? There should be two options for you. So now you're going to make me double check, because now I'm concerned that the stream might be messed up. Let me check real quick. Let's see. Ah, yes. For some reason, we are in vertical aspect ratio today. Good catch. Well, That's interesting. That's how it's supposed to look, but it's not supposed to look in that aspect. That's funny. Appreciate you sharing. Thank you. Sorry. Yeah, it shouldn't look like that. Growing pains. I will fix that for next time, but I appreciate the heads up. You can also watch on X, so X shouldn't... Now you're going to make me check on X. That is funny. It's funny because yesterday I did stream on YouTube both vertically and horizontally, just to see if people were watching on mobile like that. And now I need to check on X to see if X is the same way.
That's
all right.
funny.
X looks okay.
It's funny because
So if you're on X, you can watch me on X too and get more of a horizontal aspect. Only one way for you too. Okay. My bad, guys. It'll be fixed next time. Sorry. I guess you really can't see the chart too well, but I will try to... I don't know why it did that in that aspect ratio. My apologies. Can I fix this on the fly? Hold on. I'm going to see if I can fix on the fly without closing the stream before the market opens. We got 2 minutes here, so let me see if I can fix this real quick. I don't think I can, but I will try. Because that would annoy me. Because that's not fun to watch. Let's see. Edit title. Nope. I don't know why I did that. How weird. All right. I'm gonna run a test stream later today, and we'll fix it up. I'm sorry, guys. My apologies. That's frustrating. Anyway, so you can watch me on X or on Instagram as well. So if that is that annoying, I completely understand. I'll actually put the X link in the chat right now. So if you want to port over to there, you can. Should be able to type on, you should be able to comment on that stream as well. Let me get that real quick. Hang tight. Two things I'm stickler for is audio and visual. So when something doesn't look right or something doesn't sound right, it bothers me quite a bit. So, all right. I just posted it in the YouTube chat. Make sure that goes through. That is the link to the X broadcast. So it's the exact same thing you're watching right now. It's just going to be the correct aspect ratio. My apologies again. We'll make sure that doesn't happen next time. Anyway, market just opened, so let's get into things. Let's see. So SPY right around the LOI, right at open here. Like I said, down about 1 1/3% on the day. Not a great open, but we got a lot to look forward to today. You've got POC, so that's your point of control, where the most volume's traded right now, right around this 546.50 area. You've got this the 50% retracement here, as well as this LOI. So you got a lot of confidence here that bulls are probably going to want to hold on to into the open and not lose this level. Again, I wouldn't be too bearish unless we break beneath this 545.37 on the day. So I wouldn't necessarily rush this open, especially with what we have coming down the pike today. I'd be very careful on rushing this open if you are a day trader. Let me see how the IV is. I'm guessing it's going to be a little higher than normal. Yeah, you got a 50% IV right at open. So if you're a BTO options trader buying the open options, be very conscientious of that. That is a risk factor on this kind of open. For comparison's sake, just so you understand, typically IV on at the money options, 0-day at the money options is around like 15 to 20. Lately, that's been elevated a lot. Line LOI here. So we'll keep an eye on this. Like I said, we'll do some, we'll watch the market here for about 15 minutes or so. Then we're going to roll into this segment I have called Looking Ahead. Essentially, we'll look at the next 3 months in the market, depending on how today rolls out, right? And the rest of this week, we'll see how, what we're looking at here going into the future. And then, as I alluded to before, we have Raccoon Trades for you guys. That is going to be 3 names that I found for you that are, I want to say undervalued. I want to be careful on my phrasing there, but 3 names where they've been bearish and there's good opportunity for upside. Let me word that very carefully. So that'll be coming up right at 10 o'clock with a thesis, charts, take profits, stop losses, the whole kit and caboodle. Basically brainless work for you. You just decide if you like it or not. Nice and simple. Which most people enjoy that. So we respected that LOI. We didn't necessarily tap it yet. So we're about 13 cents off of a test here. If you did want to consider a long, that's where I would consider a long at the open. You just have to keep in mind to keep your risk very tight because that IV is elevated. So it doesn't mean you can't make money on that kind of trade, but you want to be very careful on your risk profile. So you don't want to go maybe not as heavy as you normally would. You want to be very, very careful there. 547.50. My biggest concern on the day, as a bull or a bear in general, if you're an options trader or day trader, is if you get stuck in this range, right in here, all day long. Because you've got your POC in here, you got your 50% retracement, and you've got these two important levels here. Getting trapped in here both ways would not be a fun day. That would just be a torture chamber on the day if you're a day trader. That is a realistic possibility, though. You'd want to get broken out either which way here to have legs either which way, where you could either short or take the long off the lows, or go long and grab the next LOI up here, and then if you want to flip short. Otherwise, we might just get kind of tucked in this little zone here, which would be a torture chamber on the day, but it also wouldn't shock me considering what today is. So we'll wait and see. There could be an opportunity here, but if there is, I don't think it's going to be a fantastical one. Look, IV's already come down 3% from the open, which, again, not shocking, but something to be mindful of. Okay, let me flip over here. I'm just going to keep an eye on the 546 puts and the 547 calls just to see how premiums are moving. And we're just going to watch SPY for a little bit here just to kind of get an idea on if we are looking to get out of this range. Ooh. So I don't know if you guys were here yesterday, but if you were, you heard how I got assigned on some HIMS shares at 29 bucks. I sold some covered calls yesterday, $40 covered calls yesterday at about I think it was like $1.30, something like that. Now trading 23 cents. That's a big gain, by the way. If you don't know, that means I sold. So I sold someone an option. So I collected income. I collected $1.30 per call sold. And right now, if I want to cash it out, I'd have to pay back, in this case, $25, but I keep the difference, in that case, about $100. So pretty good. Pretty good. Ooh, we talked about Snapchat yesterday. Well, looks like the bear won in that case after earnings. Now, I did say, like, this is your baseline. That's your where you want to look to be a bear. Taking a stab here as a bull and using that bottom line, that 708, as like a cut point, not a horrible idea, because if you remember me saying yesterday that 11 was very important. That's a decent markup here. Let's see. So assuming you got in like right around now, risking that, basically that low, the go to hell line as I called it. You got a 3-to-1 risk to reward. You're risking about 11% downside for 39% upside. Not horrible. I would wait and see how things play out, obviously, because for whatever reason, if it gets all the way down to like, I don't know, like 730 on the day, you now have a 12-to-1 risk to reward, which is fantastical. You risk a 4% downside for 50% upside. So I would keep Snap on your radar, because even with a tight stop there could be an opportunity if you're patient. And I'm saying equity, not options. Equity. Could have a nice little play there. Definitely something to keep on your radar. Oh, SPY back near the low. Let's keep an eye on this. What's the IV on these? Where's my IV? There it is, 48. Yeah, IV's coming off. Opened at 52 at the money. Now you're at like 48. That's a pretty decent fall on IV. Now we've actually tapped the LOI here. So now you're going to look for volume to come in. If you're a bull, you're going to want to see volume come in and bounce to the upside. If you're a bear, you want to see volume come in and break to the downside. If we leave a wick here, that makes me a little bit more bullish. If we don't leave a wick, then we're looking more bearish. There could be a trade opportunity here, but I'm taking things really relaxed today. considering what today is and all of the news surrounding the day in general. Sorry, I don't like to have dead air, but I'm contemplating my options here. Let's pull up UVXY. Let's see. Okay, so if UVXY taps about 32 and SPY looks like it's trying to bottom out, I'll look at those 547 calls. Got to keep a tight leash on it because now you're buying basically in a bear trend here, but there could be a little bit of a mean reversion to get back in this little chop zone today. I'm not fully buying this breakdown. You did have a breakthrough. You kind of had a back test, and then you came back down on this 1 minute here. But I'm not... The main reason why I don't like it and I don't like shorting is because you already had this. So you had this. So you had a bear sell. You cooled off. You're selling again, which is fine. But that tilts my reward over to the bull side of things, where I'm more interested in the bull side of trade if it makes sense. If it makes sense. Sometimes it doesn't make sense. But if it makes sense, if the risk to reward is okay, then that's where I'd like to consider it. At $2 though, those 547 calls are trading at about $2 right now, which is a little more pricey than I'd want them to be considering where they are. They do have a 37-cent delta, so assuming, like I said yesterday about how I calculate returns really quickly, you got about a $2 move here, so that's 60 cents. It's about a 30% gain if you get in around $2. All right, I'm looking at the 547s for today. I'm going to take a stab here. I'm long on the 547s with a 192 average. So what I was looking for there is UVXY tap 32. So I'm speculating that could be a bottom on volatility, or like I said, near-term bottom. Mainly looking to play back to this first LOI. And if I can get back to this POC, that puts me at about, like I said, roughly, with assuming no delta appreciation, about a 60-cent gain or so on these contracts with a $1.92. So that puts me at like a 30% gain or so. Pretty risky though, buying in a downtrend, obviously. So we'll see if we can get some level reversal here. You also had 1, 2, 3, 4, 5, 6 red candles in a row. MACD is a little overextended. I think if we see some volume come here in from the bulls, this is going to get pumped up pretty quickly to the upside. Just make sure the IV's staying... Okay, IV actually went up. So we saw 48 last time. Now it's at 50. And remember, if you're buying to open, you want that IV to increase, if anything, which is good. Moving a little bit lower here. I'll probably risk to about a $1.40 on these. I wouldn't go too much more than that. So we will see what happens. Currently trading at about $1.60. That UVXY 32 did not hold. So we broke that to the upside. So that could be a sign of more volatility on the day here. We will see. Obviously, with a 0 day, you're going to have more fluctuation in price more quickly, but you want to be conscientious of time as well. So I don't want this to, as time goes on, and if we move lower, and that can work for me as well if it reverses. So it's a matter of betting against the trend here and seeing if I'm right. This contract's currently at 155. Do we have news by chance that I just oversight on? Let's see. Ooh, financial juice went down. I don't know if you guys use finance. Oh, there it is. Okay. I don't see any news. This website's broken. Currently around closer to my stop now, around 144. May try to sweep that low LOI, like I said, at open, where if that broke, they might go right for that. So maybe I should have taken past me's advice. But it is what it is. We are right on my risk here. This is basically where I'm willing to risk it at 140, currently bouncing back up to 153. Okay. At 140, if we break this low on the next candle, then I'll cut it here. This is steep though. That is very steep. We're starting to get some wicks though, which is making me want to be patient, but I also don't want to lie to myself. 1, 2, 3, 4, 5, 6, 7, 8, 9 red candles in a row. It's a little heavy. It's a little too heavy for my taste, but there could be a lot of fear. To be fair, market down about 2% here. I'm just not buying it. I think this range that I laid out is more than likely going to hold. However, like I said, there is a possibility that 541.47 could tap. So that is a risk factor. Okay. Back to 150. Let's see if we can get some volume here. So that's what I'm going to want to watch here. You had a nice little... We did break lower, but you left a wick there, closed higher. So that's going to be your first sign of reversal. You're going to want to see a break over this previous candle here's high, which is 543.43 on this candle. If we break over that high, there's more than likely a reversal in play at that point, which we currently are trying to break it. Let's not leave a wick here, and that will be a good sign. Contracts are back to 157. Again, my price target is something in the middle of this range, basically this POC here. 546.06 is what I'm looking at there. That would put me $1 out the money. But if there's a continuation there, then we can go runner size essentially at that point. Watch your UVXY. If we sink beneath 32 there, that would also be a good sign that that could have been a quick liquidity sweep and then basically a reversion back to the mean, which is more than likely what I'm looking for here. But a little spooky here on the open. It's 9:45, so we're going to roll into the looking ahead portion. As soon as I close out this trade here, we'll move into that, which basically we're going to look at the next 3 months ahead of time. So basically this week, like I've alluded to many times already, very important week. We're going to see on if the data, or not if the data, what the realistic bull and bear possibilities could be for the overall market looking ahead, to kind of get a better idea of where we could go best and worst case scenario, at least in the next 3 months. And like I said, right around, probably a little bit later now, but right around 10:15, we're going to do Raccoon Trades. So I have 3 names for you guys that are, in my opinion, I don't want to use the word undervalued, but undervalued. They're either drawn down, meaning they've had a recent depreciation in price, or they have good future prospects, or I have one of them that's a little bit safer. That with a controlled risk to reward actually could be a very good play for you if that is something that interests you. What you don't want to see right now is basically a consolidation of these lows and then a break lower, i.e. kind of like a bear flaggy kind of move. So you do want to get above the high that was created on this candle here for any sort of continuation, that 543.67, which bulls are trying. You can see these 2 wicks here that volume's trying to push up, or buyers are trying to push it up. Volume is iffy though, so this could be a loser here. I'm willing to give it a little rope here to see if we can push harder or not. And we will find out very soon. AEMA is kind of getting squeezed down here too, so that's something else you want to keep on your chart in general. Kind of get an idea of trend. I like having the AEMA, the 13 and the 21, and also the 50 and the 200. Give you an idea of which way price action's moving from like a zoomed out point. EMAs are great because they use your exponential moving average, which means they're weighing the near-term price action more than the longer-term price action, which as a day trader or a swing trader is something that is very important. All right, we're trying again. Bulls are trying here, so there is some level of an attempt. That is not a great wick to leave behind, though. MACD is trying to curl up. The bulls are trying to push through here. I'm not digging the volume, though. I need to see more volume, and I need to break over this high here at 0.67 to get some semblance of a reversal here. We talked about the SAR indicator yesterday, and that is pretty close as well at 544.04. This is a good sign. So now your POC has moved down here. POC is your point of control, so where the most volume by price is traded on the day. Down here, you're seeing volume by time. So how much volume is traded every minute, or in this case, this is a 1 minute chart. This is volume by price on the side here. So where the most volume is per the price of whatever you're looking at. All right, we broke that. Now we're pushing higher. Those contracts are now at 168 a contract. Again, my entry is at 192, so this is still underwater at the moment here. Tapped my risk almost perfectly. I said about like $1.40, and that's basically the lows on these contracts, and ended up coming through after all. Now at about $1.70. Broke the red SAR on that, so there is some semblance of reversal here. Higher volume, broke the red SAR, MACD flipping, and these are all what you want to look for. So in a bull reversal, in this case, I probably would have established a call down here. I'm not going to average down because I feel like that's cheating, but I would establish a call down here, seeing that the support held, so the lows held with higher volume. You had SAR break with a MACD flip on higher volume by time, right here at the 949 candle. Now for the next like 2 to 3 minutes, you're going to want to see that follow through to get back to at least this LOI, and again, get into this middle of the zone. That's where I'd be pretty happy going to like a runner size on this option specifically. Volatility dropped back to around that 48, so the IV on this contract is about 48, which is roughly around where I entered. I think it was like 48.1 or something. So we popped up to 50, which makes sense that it increased to 50 as you fall and move out the money. Now as you move closer to the money, the IV probably, or should, cool a bit more. What you don't want to see here as a bull is leaving 2 to 3 minutes of wicking here without breaking over like this 21 EMA, for example. You don't want to see higher volume and then just kind of fart around here for 1 or 2 minutes. That could be indicative of just bulls not having enough strength to get a actual reversal in. So you're going to want to see another candle or two in the next 2 to 3 minutes push to the upside here. If we don't get that, then I would close out this trade at a loss. If we do get that, then that would be a sign for me to hold and push on further. And again, it's a 0-day option, so your risk parameters, whether you're trading a weekly, a monthly, a 0-day, whatever it may be, you have to adjust those parameters as you go, and be honest with yourself when things are working and when they're not. And this could be a case where things are not working. See, the POC moved higher. So now what I would think from a level of concern, if we chop here for a little bit, is if the POC stays right here, and you have another area of high volume right here, then you're going to get stuck in a lower chop zone. And any sort of chop, especially on a 0-day option, is not favorable. We don't want chop on a 0-day option, because chop on a 0-day option means you're getting decayed, and when you're getting decayed, you're losing money. So you're even less right. And in this case, I have a 547 call, so I'm out the money $3. So my risk as time goes on increases exponentially. So I don't want to inherit more risk as time goes on if we're sitting here. I don't have the patience and I don't have the time in this case for this kind of trade to sit here and wait. I will not be indicative of success for this trade. Oh, did I freeze? There we go. Okay. Oh, we did freeze. There we go. All right. Sorry. Looks like we cut out there for a sec. So I'm going to give this about 2 or 3 more minutes. If we don't break above this high up here at 544.40, then I'm going to close this out regardless of where it is, because now it's looking like it could go down to the downside or get stuck here, and I don't want to be a part of this if it's stuck here. Which it might get stuck here or push lower to that LOI. I think it's going to get stuck here. All right, I'm going to close this out here for a loss, which is basically at my risk at 140. First loss. First loss on the program. Happens, but we'll see if I made the right decision or not. I think based on what I'm seeing here, you're going to get stuck between this 544.21 and basically right here. And this actually favors the bears here, because if the bears break the low here, they're gonna sweep 541.47. And with a 0-day, you do not want to hold that kind of risk. I'd rather reestablish a long off of here and take the stab, but at that point, I'm not even going to touch it. So I'll walk on that. I'll eat the loss. It's okay. It is what it is. But what I want to do, and this is what I do in our community exclusive trading, if I do have a loss, and remember losses are inevitable, we want to do one or two things from them. One, you want to learn from them. Two, we want to see if they're what I like to call good losses, meaning you are managing your risk. So even though you lost money on a trade, you can go back and do kind of like a post-mortem and look at it and be like, wow, I made the right decision, or I didn't make the right decision, and why didn't I? Meaning, if this trade, which right now it's at basically my risk at about $1.40, if this trade goes down and then it hits this LOI and it breaks it and goes even more down, these contracts are going to be like 20 cents, right? And that would be a brilliant part on my part that I was able to take the loss earlier on. If it reverses and ends up going to where I wanted it to go to, then I can look at and say, okay, why did that happen? What did I miss? And that's how we learn, and that's how we get better. So we will do a live post-mortem on this in a little bit. We'll see where it goes. Right now it's 9:53, so we'll check back in like 20 minutes or so. So far it looks like I made the right choice, but we will see if this will be categorized as a good loss or a bad loss. Right now, good loss. Very good loss. Saved $15 a contract so far. If that low breaks, like I said, you're going down here. And I should have taken my own advice. Sometimes I'll do that and I'll go against what I said. But when I said this earlier, back tested, I should have considered the short, not the long. Is what it is. Anyway, let's go into our first segment here called Looking Ahead. So we're going to look at the next 3 months on the market in general. So I want to look at this from a daily chart, a weekly chart, and a monthly chart, kind of get an idea of what we can expect here heading into the near-term future. So looking at the market here, let me get rid of all these lines for a moment. This right here, basically 4-2, this is Liberation Day with the tariffs and everything, and this is what has happened since then. Price came down quite a bit to this 481.80. We moved back up, and like I said earlier, if we put all my doodles on the chart again, we're right around this 50% retracement, today breaking lower. So off of the all-time high, coming down to this recent low, we're at about midpoint, right? Right where that Liberation Day pricing is. It's a little bit south of that, but we're right at that midpoint. So it is a very interesting point to be in, considering that the market is, well, the end of the month is here. And end of the month prints tend to be very important. The other thing you want to look at is the fact that if we're looking at our volume profile, so let's zoom out here a little bit. Let's consider the year. Here we go, the year. So this is the year since from New Year's Day to today. And volume profile, again, is what we talked about earlier, which is this little chart on the side here, these little bars. And this is your volume by price. So where volume is based on price. And this year, you see the most volume by price is up here at 659. Mainly due to the fact that we haven't had a lot of trading down here comparatively, and this is a daily chart. Comparatively, we haven't had as much trading down here, so there's going to be lower volume down here. But there are certain things I want you to be cognizant of or keep an eye on. Basically right here at 523.26-ish, so this little volume bar here, there's a lot of volume traded down here. Which is more than likely going to act as some level of support. Without all my doodles on here, you can see it very clearly, and I probably have a line around here somewhere. But you have a decent amount of volume coming through at this level. You have what's called a volume gap here, and typically when you fall into a volume gap, there tends to be more price discovery, so price can move quicker, either which way, to the upside or the downside in this range, especially on the daily chart. Because when you, how do I say this? These points where there's higher volume, think of it this way. There are more market participants. More people have bought and sold here, right? So more people have, if you're looking at your broker statement or whatever, your average, your buying average or your shorting average, whatever you're doing, it's more than likely somewhere in these spots. So anytime you've got a gap here, which we're currently in right now, which so far I'd like to pat myself on the back because I've made a correct decision in taking that loss because I saved myself $40 a contract so far, roughly. Those contracts are now at 104. When you get into this volume gap, there is less price discovery there, so consequently, price can move very quickly. As a result, you may not find support, and again, this is just one aspect of technical analysis. We're using one thing right now. We're just looking at volume profile. On volume profile alone, you may not find support until you get all the way down to 523, which is about 20 points lower than the SPY is currently trading. Now, I don't want to sound bearish necessarily, but it's at least something you need to consider in your risk analysis for the market. The other thing you want to consider is we have been and we have broken under the 200 MA, this dark blue line on my chart. Very important long-term line on the market. Let's zoom out a bit and see what happened last time we broke the 200 MA. Last time we broke the 200, I wouldn't even call this a break. I mean, we were under within 5 days, so we're not going to count that. 1, 2, 3, 4, 5 days again. Okay, so here's actually where we're actually trading under the 200. So we broke the 200 MA up here on 426, and then pretty heavy bear selling continuously. Back tested the 200 MA right here. This is back in 2022. Sold off again. Back tested again within like a 5-day window twice. Sold off again. Tried to break it. So this is what you want to look for in terms of a longer term reversal. Broke it, came up for a little while, about a month here. Came back down. Now you back tested it, right? And now you're off to the races, to the upside. And this is back in March 23. And from then, just so you can understand here from perspective, the SPY was trading around like 380. It didn't cross. And again, we're not counting this little retest here, this 5-day retest. But the next time it crossed under the 200 MA, hold on, we'll get there. Back here at 567. So that is a 49% gain on the overall market in that time. Crazy, right? And this is one line on a chart, right? But you have to understand that people like me, people like you are all looking at the same lines on the chart. More importantly, algorithms and hedge funds are looking at the same lines on the chart and see these big patterns. So when big money is moving in these positions, you have to be aware of what can happen when these lines break both ways. We broke under it on 3.7. We back tested it only for a period of a day or two, and we stayed under for more than 5 days, which is typically what I look for to be indicative of a break. And then we came down, and then we had a pretty hard sell-off, and we're under it pretty comfortably. So for me personally, I wouldn't be long on the market, meaning like I'm thinking, years long on the market, until we're back over the 200 MA, which is currently trading at about 570, specifically 570.02. I would not be long the market in general until we're comfortably over that for a period of greater than 5 days. And even when we're above that in 5 days, I would want to wait for it to backtest. So going back to history again, we go back to the last time this happened, right? 5 days, sold back under, broke above, stayed above for more than 5 days. Right here, you backtested it. So it came back and tapped it again, and then you were off to the races. That's the time to consider getting long the market in general. But we're under that level, and again, keeping things basic, you want to be very, very cautious. Now, let's go back and look even further. Let's look for another example. Here we go. Here's the big old uptrend. Oh, COVID. Fantastic. So here's COVID. Here's a great example. I'm pretty sure this is COVID, right? 2020. Yep. Came down. Broke under for a period of 5 days, came back up for less than a period of 5 days, broke under, sustained under, so we're under for more than 5 days, so that's what I look for a confirmed break. You're staying under, broke above, stayed above for 5 days, so you had a confirmed break to the upside in this case, came back down and back tested it, so that's where you can consider getting long the market, and then it didn't break it again. I mean, it did test it one more time, but it didn't break it again. Price there, if you got it on the back test, 278 until it crosses again. It should be right here, 419. Another 50% gain on the market. So very simple tool you can use, the 200 MA on the daily chart. That's it. 200 MA on the daily chart. If you get in on the back test once it breaks to the upside, at least in the last 2 times it's happened of any level of significance, you have securely locked in about a 50% gain on the S&P. Hold on, let me see if we tap my LOI. Look at that. Look at that. Even though I had a loss, look at the tap. We were off by 3 cents, 541.52, 541.47. See, this is the time where I don't listen to myself, and I should have taken my own advice. Tapped it. Big volume came in. I could have had a nice little quick win there. Ah, salty. It's okay. But that would have been a great trade. Stupid. Anyway, now let's look at the Qs. And we'll look at the Qs, we'll look at the VIX to kind of get, again, a better idea on looking forward. So that was just specifically looking at the 200 MA. You could plug and play the same thing with the Qs. The Qs you want to be very, very conscientious of, mainly due to the fact that, whoops, no, I don't want to do that. I want to do that. Mainly due to the fact that this is like your, if I like to use IWM for a sentiment driver for retail, I want to use the Qs as a sentiment driver for growth. Okay. So, which I know seems a little silly, but with how the market's structured and with so much of the S&P being like tech companies specifically, when I say growth, I mean growth of the overall market. The things are looking nice. And that's kind of what I'd be looking for here on the Qs, is to get that level of a recovery. Now, obviously, the chart's very similar to the SPY. Price action is going to be similar, but it's going to be more volatile. So if you compare this over time, your S&P 500 is going to be less volatile than the Qs, because again, if we're looking at the Qs as growth, right, because tech is so important now, we're looking for this to be your canary in the coal mine in terms of getting some level of reversal. So there could be a point in time where the Qs recover before the SPY recovers on the daily chart, which if you just look at these side to side, I mean, actually, I want to like measure it, but you should see, I should say, the Qs try to make that break first before the SPY, and that could be your, like I said before, canary in the coal mine that bulls could be stepping in. Now, the other thing you want to be aware of, let's get this back to beginning of the year. So just to keep things even, right there. Your volume profile here is completely different than the SPY. You actually have a lot of bulls stepping in here, basically like yesterday. This price right around 473.45. So that's indicative that people are taking a stab on growth earlier than on the market. So let's look back at the SPY. Same time. This is looking at start of the year to now. Yesterday's price doesn't have that volume. If we're looking at the volume profile, look at the side here. Those bars are not nearly as long, right? That is indicative to me, at least, that people are willing to take a stab, and a pretty aggressive stab as of yesterday, and back here as well, that growth may have a recovery. Now, with that being said, volume profile down here gets way thinner. Obviously, we didn't trade as much down here, so it's harder to read, but comparatively, SPY has more support in general. So this is why I look at the Qs as a canary in the coal mine for growth either which way. That if the Qs can get some volume pushed to the upside, that's a good sign that growth is actually reversing and we're seeing a more aggressive push on growth, which is a good sign for the market health in general. So basically, what I would look for longer term if I wanted to be a bull is to see the Qs cleanly get over this 480 area first, and then break the 200 MA. Now you have a nice volume profile gap here, so what I anticipate happening is breaking above that 480, coming up, having a little fart around this 490 area, basically tap like 500, maybe like 505, a little bit extension, come back down and back test that 200 MA, just like on the SPY like we talked about, and then rock it to the upside. If you're a bull. If you're a bear, keep it real simple. You, this week, in general, specifically with the Qs, you don't want this week to close under 480, or under 4, what is this actually? Let me get you the exact. Under 473.49, you don't want the Qs closing under that. If the Qs close under that this week, that could be indicative of a potential leg down on the market, at least in growth. And obviously, they'll pull the whole market with it. Now, obviously, I feel like I've said obviously 4 times. Obviously, with how Microsoft and Apple are reporting earnings, that's going to be a big factor into where the Qs are going to move. So, and eventually when NVIDIA reports as well, that would obviously affect things quite a bit as well. So seeing what happens the next few days here, this is why I named the stream Mayhem, because it's going to be hectic in my opinion. There's going to be a lot of positioning, and if any of these companies that are reporting earnings say something that is perceived poorly, it is probably going to be a bad time in general. So it is an interesting time looking forward. So that's, I guess I should touch on the IWM. So the Russell, For those of you who don't know, the IWM is your Russell 2000. This name, when the market gets bearish, gets hammered really hard. So I want you to think of it this way. I would never long-term invest in the Russell 2000 long-term, because when a company gets big enough and successful enough and they trade on the Russell 2000, guess what they do? They get plucked from the Russell 2000 and then they get put over in SPY, right? So essentially the Russell 2000 may have bursts of success and bursts of doing really good, but when these companies get so profitable or so successful on the Russell 2000, they leave the Russell and then they go to the S&P 500, which is why the S&P 500 is always the best thing to invest in long term, because it is a basket of the 500 best companies in the world, the most successful companies, so to speak, the biggest companies, right? The Russell 2000 is not that way. The good, successful companies that came up on the Russell, they graduate to the SPY, they graduate to the NASDAQ, right? They leave the Russell behind. And when they leave the Russell behind, it leaves the growth behind with it. Now, that doesn't mean that small companies can't all do better at the same time, but that's the main reason why I say that IWM and the Russell in general is a great indicator of sentiment. Retail trader sentiment across the board in general, because smaller companies, if they are having a less, if they're having a more successful time, if they're not struggling as much, theoretically the price, there would be appreciation across the board of smaller companies if they're doing okay. Smaller companies doing poor or poorly, there'd be a depreciation in their share price, right? And that's just blanket statement. It's obviously not one-to-one like that. You have 2,000 companies here all in one. But that is something that you could look at when you're looking at the Russell. And that's also why, although the Russell moves up with the overall market, when it draws down hard. This is the monthly chart. Sharp drop, sharp drop, sharp drop. Anytime there is a drop in the market, there's a 2008 financial crisis. Where's COVID? I think this is COVID. The drop is precipitously higher than the market. Your small caps and your individual names. So I know I had a few smaller cap names that I invested in, and they got absolutely hammered after the 2nd of April. Like, obliterated. You woke up and they were down 20%. Like, it was just nothing. Versus, like, obviously, like an Apple or whatever, maybe down 5%, but not nearly as hurt as some of these smaller names. So that's something you want to be aware of, just to kind of get an idea of sentiment. So you want to look at the cues for growth to get an idea of if growth is progressing well, and you want to look at IWM for sentiment. Those two things together, if they move in tangent, so they move together, can be a great sign. There are times, and I've said it before in our community exclusive trading, where one goes and the other one doesn't. Meaning, sometimes growth does really well, and sometimes sentiment or the Russell does poorly. And sometimes money will flow out of one and flow into the other. So that's something where you want to keep an eye on. It's perfect when all things move aligned together. SPY, the Russell, and the NASDAQ all go together. That is like the best go signal, right? But when you have this kind of shifty kind of price action, or at least they're all agreeing on downside, that doesn't make you, or shouldn't make you, very bullish in general longer term until you get that sign. So looking ahead, I feel like I gave you guys a pretty good bull and bear outlook on the market as a whole. I think you got a good setup here. I wouldn't be super excited to trade long. I wouldn't be super excited to trade short. And if you're a newer trader, especially if you're like a day trader, swing trader, you may find this environment frustrating. I know there's some people in our community have been very frustrated in general. The best thing that someone could do when they're feeling frustrated is one of two things. Don't trade at all, or lower your size. A lot of times people feel frustrated due to the fact that they trade too heavy because everyone's trying to get rich overnight. If you trade a lighter size, then you don't feel the burden of the lack of success, perhaps, right? If you have a loss or you do really well over and over again, and then you have that one loss, it doesn't sink you as much. So be able to understand, and I think I talked about this on Monday, be able to understand that there are times where you're going to want to floor it and hit the gas, and there's times where you're going to want to pull back and hit the brakes. And the ability to go against your human nature and understand when to do one or the other is what would actually make you successful in investing in general, which is a painful lesson I have learned personally over the years. So It's a painful lesson that if I can help share it with you guys so you don't have to go through that pain, then hopefully you take it to heart and save yourself some money and heartache at the same time. With that being said, guys, we're going to roll into Raccoon Trades. But before we do, wherever you're watching, if you could do me a quick favor, drop a like, drop a comment on the stream, share it, subscribe, follow, etc. Greatly appreciate it. Really helps me out in the algorithm, helps us get out to more people. We've got 150 people watching right now, so even if half of you took 1 second, clicked it open, and hit like or comment or anything like that, it really would help. Means a lot to me, considering I get like 5 to 10 likes. So I'd love to turn around and see at least a nice 20 there, which is 10%, 12%. That would mean a lot. So I appreciate it if you find this content helpful. You like the show, this is the third show of the week. If you're enjoying watching it, a little bit of support goes a long way. So thank you very much. It's greatly appreciated. Now we will roll into Raccoon Trades. So I got 3 names for you guys. And these are names I'm personally long on. So full disclosure, these are names that I've opened up a trade. I'm long in these names. So I do have a position in these names. So be sure to take that with a grain of salt and understand that I am already long. So obviously I have a bullish outlook on these names. But then again, I would not share it with you if I didn't have a bullish outlook on these names. The first name here is Rackspace, RXT. So Rackspace, this is a company that basically provides the IT infrastructure for Epic. And what Epic is a, I should say this is their main customer, right? Epic essentially gives a bunch of hospitals the background or the ability to electronically use medical records for patients. It's an EMR system. And they're able to track things for patients, etc. It's what, when you go to the hospital, they'll typically pull up your charts and whatnot. My wife is a nurse. I actually asked her about Epic the other day to learn more about it, because it's not something I've experienced. And obviously she's someone who uses it every day at her job. So sometimes getting that real life experience is very helpful. There's actually a ton of there's a ton of times where you can make a lot of money on trading in general when you see the trends happen in real time. When you see people are not buying Nike anymore, they're buying Hoka's and On, whatever, right? When you start to see trends shift like that, where you start to see the money start to go in real life, typically the stock follows at some point. And Epic is actually, according to her, like the Rolls Royce of EMR systems, right? It is it is what is necessary for nurses to do their job exceptionally well. And she even made a point of saying so far that one of her requirements for if she ever worked at another hospital is to work with the system, because the other systems suck that badly, or that bad, right? Now, to be very clear, again, RXT does not provide the actual system Epic, but they are their IT backbone. So they are basically have the server uptime. They do everything for Epic to be able to run, essentially, which is actually really important, because specifically with those systems with EMR, there's specific HIPAA rules and whatnot, where systems have to be up at all times. They have to be available. Transfer of information, very sensitive information, obviously. So there's a lot of criteria that's extremely important, especially with like security of this information, that relies a lot on this company. Now, as you can see on the chart, it has gotten kicked hard, beaten down, as short as 2 months ago. This was a $3 stock. It is now $1.31. Again, transparently, I opened a position around $1.34. And looking at where it's currently sitting right now, let me double check where I have my stop. I'm going to give you guys basically my trade, and if you want it, you could take it. You can do whatever you want with the information. But basically, I opened the trade at 134, and I'm using a 0.95 stop loss, mainly giving it a bigger stop loss in this case due to earnings coming up, which could offer some fluctuation. I used a 4% risk allocation, which means 4% of my normal size. If I'm looking at a full portfolio, I'm putting 4% of my portfolio into this name. And if it taps basically 105, then I would up that risk allocation to 5%. So a little bit more, save a little bit money on the side. We talked about that yesterday if you were here. So I could add a little bit more if there was a discount off the earnings. So it's giving me a little bit of flexibility here. So that puts this, as it sits right now, at a risk to reward ratio of about 3-to-1, assuming a 20% loss to the downside and assuming a return to about $4 or not $4, 230, which is a 74% upside. So I'm risking, like I said, 3 to 1 here on this kind of trade, where, and I'll give you guys these price targets as well, where it won't be a direct ride up, obviously, but when I set my price targets, when I'm looking at risk to reward, I keep my risk, or try to look for my risk pretty low, especially with these Raccoon trades where you're buying in at least for this stock, a dangerous environment where it's sold off, right? It's come down pretty hard, and then you're looking for some level of stability, which we have here. You know, we're starting to flatten out. We're starting to find some footing down at this price. We're not falling recklessly anymore, to take a stab at it with a calculated risk with a calculated reward. And based on what this company does and everything, and with earnings coming up, it could be a good calculated reward. Now, with that being said, areas in which I would consider taking profit prior to my final take profit goal, or not my final, but I kind of keep an average here. So how I set up my goals are, when I typically look at risk to reward, I look at what's realistic. I don't look at like sky high. Now, obviously, this stock could go to $30 one day, right? But if we're looking at more like a swing trade with equity, this is kind of how I want to structure it. So my first price target, I'd be looking at 145, and all of these price targets, they're like LOIs with SPY. So same kind of thing that I show you guys on the stream. These are important prices on the chart where you could see volume come in either which way, right? But it is basically points of contention where if breaking above, then you should see some follow through to the next line. If rejecting it, if you're tapping it and coming back down, may be a sign for you to get out, move your stops up, etc. So areas in which, when the price interacts at these points, you want to make considerations of what to possibly do. Those areas are 145, 171, 191, 211, and then right in this kind of like sweet spot at 234. Now, past that, I do think there's realistic possibility if this get up to 241, 247, and finally 310. At least, like, when I say swing time frame, I'm looking at like 6 months, like under a year, is what I look at. Now, this company as well is a $300 million market cap company, so it is a smaller company. It's not like a nano cap, but getting back to that $3 valuation puts it back in the $1 billion ballpark. So I like these kind of companies because they're at a point where when they're drawn down a bit, when their market cap comes down, because obviously they lost a valuation, right? Their share price drops, and you're at a point where it's gotten smaller, where if you get in at a low point, at this point where it's around $300 market cap, your price appreciation will be very quick to start with. Also, your loss too, though. To be fair, you could have a quicker loss, so your risk goes up, obviously. But as it moves up towards your price target, so if and when we get near this $3 area, as the price increases, price action becomes more steady because the market cap gets bigger. So it takes more dollars, essentially, to move it around, to bully the price around. So as price appreciates, especially if you had a nice average down here at like 130, as price appreciates over time, it's harder and harder and harder to move the company because that market cap grows and grows and grows and grows. So at that point, if we get over $3 pretty comfortably, if I want to look at the weekly here, which that 310 area is hard, you've got a gap here, another gap. These green lines here, just so you know, are all gaps. Gap, 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 gap. Could get all the way to $7. At that point, you're putting at a $2 billion company. What I also like is that anytime you're in that lower range, like under 10 billion, depending on what they do, could be buyout territory, depending on the company that's looking to buy it, depending on the fuel. Since this company is functioning with a main customer being in the healthcare market, healthcare obviously has a lot of money. Someone like this could be a buyout target. It's not my focus for this trade, but it is something that could be a positive or a bullish sign for this company, where I would want that involvement just in case there could be a buyout or them going private, right? But you do have these gaps to fill to the upside. You want to zoom out even more. I mean, they were all the way up at like $15. They IPO'd at around $15. So taking a stab here, and again, if you held on to your shoes here past 3, you're at lower risk as the price moves up. So you can ride a tighter stop as time goes on without risking the gain that you had. Now, again, in this scenario, I'm risking 95 cents here with the ability to scale up to 5% risk allocation at a 105 tap. That's mainly because earnings are coming up, and that's going to muddy the water a bit, obviously. But if things end up being good, just looking at the risk to reward here, I think this is a great trade to consider for your own portfolio, depending on your risk, depending on, I guess, what you're currently diversified in. I like this name. It's a company that I think isn't going to go anywhere. The one thing that would kill this company is if they lost this deal with Epic, essentially. That's like their big thing. That's where they draw a lot of money. So losing that deal obviously would hurt this company. So that's your risk factor there. But from a technical standpoint, I do think it's a good calculated risk. Even on just a generic mean reversion, like getting to like $2 wouldn't be a far cry, in my opinion. So something to consider if you like it. Next name I have for you guys is a boring name. This name sucks. And by sucks, I mean you're not going to have fun trading it. It's going to be a snail. It's going to bore you. But it's a relatively safe, at least in my opinion, place to plug some money while you're waiting for the market to kind of do its thing with good calculated risk to reward. And that name is Bro, B-R-O, Brown and Brown. So this is an insurance company. Boring. Boring. Look at this chart. It's boring. It doesn't do much. But yesterday they reported earnings that weren't atrocious. They weren't great. But in my opinion, they weren't atrocious. And that did offer some opportunity. They gapped down on the bad earnings. But this is the daily chart here. This dark blue line, again, is my 200 MA. Look where we tapped yesterday and look where we closed. The 200 MA is right at $100. Yesterday, you sunk beneath that, but you closed above it. In fact, yesterday you closed at 107.99. So actually, I lied here. The 200 MA is at 107.46. So you closed 50% above the 200 MA. You even wicked beneath it. So remember, when you're coming down, you see a wick go back above. That's indicative of price action moving above. People are buying more to push it over that level. So coming down beneath it and buyers stepping in to close above that price, at least to me, is indicative of having some potential bull pressure here, even off of a bad earnings. Now, with that being said, what should you look at for this kind of trade? Again, this is going to be a boring, slow-moving trade, at least in my opinion. What I'd look at here is looking at a stop around, let me just pull up my notes here. A stop set to around 103.99. That basically just risks you 3% downside. That's it. Pretty clean risk to reward here. By the way, this is a 4-to-1 risk to reward. Your upside target is about 121, so that's a 13% gain. Nothing crazy, right? 13% is not a lot of money if you're a day trader, especially. It's not a crazy gain, but your risk is so tight here with a 3% risk to the downside. If you're willing to park some money here and be patient, I think this is a really solid trade. 3 areas in particular to keep an eye on. 113.93, so that's basically your gap fill from the earnings gap, so that will more than likely have some impact there. You got a big cluster here around 117.66. You have your POC there. You also have your GP, so that's your golden pocket from the fib retracement from yesterday's low to all-time highs. That more than likely is going to be a place where there's going to be some distribution as well, so be conscious of that. But if you get over that level and tap your final goal here at 121.70, that would net you at least 13%. And again, since this thing moves so slow, you could keep a super tight stop as this thing goes up and keep your risk very close to your chest. That move yesterday is a very outsized move for a stock like this. I believe it's $30 billion. Yeah, $31 billion company. And with the industry it works in, it is not exciting. It is a slow mover. Recently, you've had some volatility, obviously, with like the tariffs and stuff. Basically, this big drop from all-time highs happened after the Liberation Day thing. So having that drop there is kind of inducive. Can't find the word. That doesn't seem right. It's because of that. And essentially getting that bad earnings, had it gap down even lower. It is risky because you are pushing it into more of like a bear trend here. But again, with a really tight risk profile of only like a 3% loss here, you do have the support also at 104.74. So if you're someone who wants to wait even more, you could wait for this 104.74 area to tap and have an even tighter stop loss, because then at that point you're only risking like 75 cents. And then your risk to reward moves dramatically at that point as well. So something to consider. I like that it's holding the 200 MA. Today it's holding the 200 MA. You guys, sometimes, especially with like swing trading equity specifically, the 200 MA on the daily is just such a simple line, but those opportunities, when they come, they typically are low risk, in my opinion. Depends how you get there. That's very important, and it doesn't mean you're out of the woods, especially if you're buying in like a pretty heavy bear trend or like a bear reversal here. You have to babysit it a little bit, but if you are willing to take a stab on a stock, those are typically good times, especially on equity plays, to consider a stab. Last name here is UCTT. Now, this is a company that operates in the semiconductor industry, way more risky than the other two, for what it's worth. So keep that in mind. And even though I believe the market cap's a bit bigger, yeah, so it's bigger than RXT, but smaller than Bro, much smaller than Bro. 80 million market cap here. So they operate adjacent to semiconductors. So any news with semiconductors being positive, this will obviously have a decent move. Any negative, it would obviously have a bad move. Currently wicked beneath the 200 MA on the monthly. Let's go here. This is what I was looking at yesterday. So we wicked beneath the 200 MA on the monthly. So that 200 MA on the daily is great. 200 MA on the weekly, even better. On the monthly, you have to keep an eye on it. And when that interacts, it's something that you should not ignore. Currently, that price is $17.99, the 200 MA on the monthly. We wicked beneath that, and so far we're coming up above it, and we're looking to close above it as of today. So if this closes over $17.99, that tapped the 200 MA and closed it on a monthly time frame. So with that being said, the daily doesn't look fantastic. This doesn't look great. This isn't bullish by any means. In fact, you're buying kind of a falling knife here. I don't want to say falling knife. It's a little dramatic. You're buying a chart in a bear trend, to be fair. Now, they just had earnings. And I like looking for these stocks after earnings where they have a harsh earnings yesterday. I think they were down 13% today, down another 4% here. On these companies that I don't think are really going to go anywhere. This is one of those companies where the risk is a little bit higher. I used a 4% allocation for this trade. And I said if 18 taps, I want to bump this up to about a 5% allocation. At that point, I'm looking at a 1570 stop loss. So 1570 gives me a little bit of room here where that localized low is 1666. But here, I'll show you why. Where are we? 1570 is right around here. Kind of hard to see with the gray cross here, but right around here where there was some level of support back in 2020. Or I should say resistance that turned into support. So that's why I'm willing to risk that in the event that 1666 breaks, because we're in a bear trend, so I need to allow it to have that levity that it could go down, right? If I assume a stop loss down there at 1570, this trade offers a 4.5 to 1 risk to reward profile. If I'm looking for this gap fill back from, again, what was this, Liberation Day, I'm pretty sure? No, back in February. Apologies. So pretty decent risk reward if you like semiconductors and you want a little bit of semiconductor exposure. Now, that being said, areas you want to look out for, this open gap here. So from the earnings gap, that 2179, past that 2408, you've got another gap to fill, or you got a big gap with a little, probably a pit stop in the middle of it. That 2931 starts the gap. Then you've got your GP right here, plus an LOI at 3257. That's a significant level on the monthly chart. As you can see right here back in 2023, a little bit of a chop zone there. So that's a significant level you want to keep an eye on as you move through that gap. And then finally filling the gap at 3601. Again, assuming an entry at 1927, which is where I entered. So you could get in about $1 cheaper here. That's a 4.5 risk to reward ratio. So you could probably get a better risk to reward ratio. In fact, let's see. If you got in at, I don't know, what's that? 1840. That flips your risk to reward to 6 to 1, 6.5 to 1. So, hey, something to consider if you like it. But with all of these trades, especially in the environment we're in, you have to manage a stop loss. Do not consider any of these trades without stop loss because you are not out of the woods yet. As we just talked about with SPY and the Qs and IWM, we're nowhere near out of the woods yet. We're trying to get out of the woods, but there's no confirmation yet. Looks like I would have made, let's see if I made money. All right, I would have made money on that trade. 239. That would have been not a smart hold, though, to be fair to me. That would not have been a fun hold for me to just hold that whole time. To hold basically 40, 50 minutes through that would not have been a fun hold. But back to this LOI, now you should see bulls try to push it up a little higher. So that's good on the SPY. Anyway, yeah, so that's going to wrap it up for Raccoon Trades. So that's everything we've got scheduled for the day. I'll open the floor real quick. If any of you have any questions or anything you want to drop in the chat, I'll keep that open there for a minute. If there's any stocks you want to look at, etc. I'll take a peek real quick, and then otherwise we can wrap this baby up. Let's check out Snapchat real quick while you guys contemplate dropping a message here. I'm going to watch Snapchat today. I think with, again, if you're risking a stop at the 698, so just a little bit lower than my go to hell line. That 708 is my go to hell line. If we can come down a bit more at like 730, you've got a decent risk reward. I don't love this company by any means, but you do have a decent risk to reward too. And again, that 11 level from yesterday that I mentioned is very important. If the market does end up reversing, this could be one of those names that just happens to hold on really nicely and just rally with the broader market. So it is something that you could consider. But I would want a very, like I said, a very specific fill and a very tight stop. I'd want to get filled south of 725, and we're talking like I'm putting a stop on it like 699. I'm only allowing like a very, very, very limited loss on this one. Mainly because I hate Snapchat. I was trying to be unbiased yesterday. I don't really think Snapchat's a good company to invest in. I was trying to keep it as unbiased as possible. All right, we got nothing from the people watching. 158 viewers. Thank you all for stopping by. I greatly appreciate it. If you could do me one quick favor before you go, if you enjoyed the content, if you watched one show, two show, or all three shows this week, do me a favor, drop a like on the stream, drop a comment, drop a share, subscribe, follow, all the fun, interactive call to action things. Really means a lot to me, helps me know that you guys are appreciating the content, and it's something you want more of in general. But with that being said, some say you may need an edge to trade. Well, I like to look at things from a different angle, and that is what you will always get here on the Atomcash angle. Have a great rest of your day, and remember, precision beats prediction every damn time. Take care, guys.